Hey, stock traders and investors, welcome back to another Sunday prep video where we are talking about the week ahead and what kind of stocks and ETFs are looking like they have the most or least potential in the upcoming weeks. Starting out with the big one, SPY, we're taking a look at a monthly chart, and it is very clear that the bulls remain in full control, full throttle to the upside ever since that April sell-off around the tariff worries and uncertainties. We have seen the stock market go on to have one of the most impressive one-directional run-ups that I have seen in my years of doing this. And this is sort of in the context of what has been already a very strong bull market in the last few years. So the question naturally starts to show up all over social media, which is, okay, well, how much longer can this really go? We've had such a huge run up in stocks. Surely it's due for a correction. And while I do think that that is actually kind of a valid thought process, stocks don't go up forever, and you do usually get corrections even in bull markets, which we have been in one of the most impressive bull markets of history. So how much further can this thing really go? Well, I think the better question is not how much can it go further, but rather, does it look like it's still going to go further for now? Because again, we can't predict exactly when the top of a bull market is going to be. And so right now, all we can do is we can look at market structure, the macro fundamental outlook, and of course, financials around companies that we're watching. That's what we can do here on this channel. Instead of trying to make a big, huge prediction as to what the stock market's going to do in the next coming years, let's just trade what's happening now. And so what is happening now? Well, we've got higher lows and higher highs in the U.S. stock market. On the monthly chart, we can see the bulls are still in full control, and until we start to see some failure of the prior month's lows, I really think that the stock market can continue to sort of melt up. However, not all stocks are created the same. Remember that the stock market is a market of stocks, not necessarily, everything has to move together. So we can talk a little bit about that further, but before we go into that, let's continue with our daily chart analysis of the SPY. Last week, we had a remarkable move higher, even though you had a little bit of uncertainty around Fed Day. Fed Day quickly rebounded, and we yet again continued to pile drive higher. And I do have to say that there is some stretch sentiment. I wanted to show you some cool stuff that I found with the put-to-call ratio. Now, if you don't know what the put-to-call ratio is, it's a really simple indicator. It looks at the options market flows, and it helps us to spot how much or where sentiment really is when it comes to key ETFs, stocks, etc. So of course we can reset this and we can just look at the SPY. Ignore this last data point. I think this is an error on our side, but if I look at, like, for example, QQQ, right? QQQ is actually kind of an outlier. We did actually see a surge in put demand, but if we take a look at a lot of these things, what we're actually seeing is a huge surge in call demand towards the end of last week. Now, the way I want you to think about this is that when this thing is going much lower than usual, right, or below the red bar here, which is our standard deviation for an extreme greed reading, what that's showing you is that people are out there buying puts. And last week, we had a pretty big option expirations day, and we saw a huge surge into call demand. I think I said that wrong. Not put demand. There's actually a huge demand for calls last week. When the reading is high, this is a high demand for puts. So I apologize for that. What I actually meant to say is that call demand was very strong last week. Towards the end, after the Fed Day, we saw a rush into calls across a wide variety of markets. Take, for example, the financials sector ETF, XLF. There was a rush into calls here. If you want to take a look at, for example, the Russell, we saw the Russell go from high put demand to sort of moderate a little bit. But let's take a look at, for example, technology stocks, XLK, an ETF that tracks a basket of tech stocks. We did see this thing start to go into high call demand. So lots of call demand going into the weekend. I thought that was worth mentioning, as we do see sentiment also materially improving on the AAII Investor Sentiment Survey. So the crowd actually had a big uptick in bullishness as of Thursday. Thought that was worth mentioning because bearishness has been kind of high recently, but we saw moderation in the bearishness side and increase in the bullishness side. So this is, of course, a weekly survey that is conducted, which asks market participants, are you bullish, neutral, or bearish on the stock market? And so we have seen a rise recently in bullish sentiment. So it makes good sense. Bullish sentiment is starting to rise in a market that has been rising tremendously. So I do want to flag, though, that this is not showing extreme readings. The put to call ratios are not showing absolutely extreme readings, but we are getting closer. What I mean by that is that we are seeing a lot of sort of euphoria. You also have some really high flying names. Just a couple to note, and this is a stock that I own and love, Robinhood Markets, absolutely exploding. If we take a look at AppLovin, this thing is going parabolic. Of course, Palantir has been on a monster upward trend as well. So you have all these different sort of euphoria names, or the retail high flying, exciting names, doing really well. Now, that's not necessarily a bad thing, but it is something to draw a sort of a little bit of concern from. And what I can see here also with the ARKK, this is the ARK Innovation Fund by the very famous Kathy Wood, who owns it or operates it. You can see this one also has had a huge surge higher. Not only this, we also see crypto, right? Not necessarily in the last week or so, but we've had a jump in Ethereum. And if we take a look at IBIT, a Bitcoin tracking ETF, this too is also on the run. So is there signs of a little bit of froth in this market? Maybe a little bit. Prices are expensive on stocks, but it doesn't mean they can't continue. However, what I would actually look for some signals from would actually be the equal weight ETF. This is the S&P 500 where each stock is equally weighted within it. It doesn't give a huge allocation to, for example, an Apple or an Nvidia. And so this gives a broader look at how the stock market tends to be performing. So yes, the SPY is kind of running away with it, but the equal weight S&P 500 or the average stock in the S&P 500 is not doing exceptionally well on average. I mean, it's doing well, right? We've still had a great return here, but not in the last few weeks. It's been sort of mixed. The Dow Jones, however, has been performing well, and the NASDAQ is absolutely up and to the right as tech stocks have been leading big time. Before we get into individual stocks, I also want to take a quick look at sectors. One of the big things to note here, semiconductors are flying high. And I want to just take a quick look and see what semiconductors look like. Do we have that on here? Yes, we do. SMH also showing a significant amount of call demand. Now, here's my short-term prediction. And I'm not going to bet against the market, but my short-term prediction is I think that we're getting some pretty extreme readings and that we are very likely due for a little bit of a pullback here in the coming days or weeks. Now, I don't necessarily think we're going to get some sort of crash, but I think there's a good chance that you do get some pullback in some of the high-flying stuff like SMH. If we take a look at QQQ, right, a lot of the exciting run-up stuff that we've seen in recent weeks, I think it is perfectly normal for us to think, okay, those things look really strong. However, maybe we are due for a little bit of a pullback. RSIs are flaring up, showing really overbought status across a lot of stuff here. Again, not something I would short as it's in a strong upward trend, but if you were to get some dips, I think that would be a more constructive opportunity to buy the dip on some of these instruments. Now, again, I think there's more upside, and I also want to make sure that we just touch briefly on the macro, which really improved this week, guys. Last week, if you listened to my video, I mentioned I was a little bit concerned about the macro outlook for stocks. It's not like it's perfect by any means, and stocks are still at all-time highs, so I'm not looking to aggressively buy stuff, but we did get an improvement in this stuff. Specifically, retail sales numbers last week came in much better than expected. Forecast was for 0.2% month-over-month growth. We got 0.6% month-over-month growth. We also have seen some pretty strong GDP statistics, 3.3% compared to the forecasted 3%. I mean, this is above trend growth for the economy. That's not too bad. Jobless claims also were slightly better than expected this past week, and we heard from the Fed that they still plan to pretty much cut rates for the rest of this year. That seems to be consensus. We'll see if that happens, but we also had services PMIs recently, which came in better. So long story short, yes, the jobs data looks pretty rough, but I think that you have some strengthening data points in some of our growth metrics, and inflation seems to at least be holding still for now. So is this a picture-perfect A+ report card for the macro? No. I think that this report card gets you, well, what is a 55.5%? A half of our ratings looking good. That's not necessarily a failure. I know that on percentage basis would be considered a failure, but half of our indicators are giving us a bullish rating and the other half are either giving neutral or bearish. So I'm going to say that this sort of gets a C for the macro. If the data on the jobs data starts to come in better, if jobs report stuff starts to improve, then I think that starts to paint a bigger and better picture for stocks. But I think what would be more appropriate for me would be to wait for pullbacks in sectors and stocks that I like. So now I think it's time that we start diving into some individual stocks. Now, if we take a look at the top stocks indicator, now what the top stocks indicator does is it looks at a collection of technical readings, sentiment data, and financial readings to give us an idea of which stocks might be better than others to look into. And I've got a couple that I wanted to go through here with you guys. Of course, Amazon is an easy one. This is one that I am pretty much always looking to buy the dip on Amazon as long as the valuation looks relatively attractive. So Amazon's been on the watch list for me. I am looking for an opportunity to possibly pick this one up if you were to get a bit of a broader pullback in markets. Somewhere around the 220s to 212s would be an attractive entry point for me to add some shares and get long further on Amazon, as I already own some shares of Amazon in my portfolio. This might be one to add. If we take a look at BIIB, this is a healthcare name that I've talked a little bit about on the channel here. Stock looks really good from a momentum perspective. Last time we got a sort of oversold reading was around this area. I would love to see a bit of a pullback further here. Could start to look into it around 138 to 132, somewhere in this region, maybe a pickup for me on the long side. So I'll keep an eye on BIIB, that's Biogen. Another one that I like off of this list, have been talking about MasterCard as a possible pickup if you were to get a little bit of a dip in financials. So I've marked up this level already around 570, possibly an area where I look to get some exposure on the long side to MasterCard. I've never actually owned that stock, so could be an interesting one to watch as well. Another one that I already own is Uber. Had a crazy week last week. Uber shot up on Friday following the big sell-off earlier in this week with some announcements that Lyft was going to be partnering with Waymo. So stock did not particularly love that. However, we did bounce back strongly. Stock looks really good still. I would be not opposed to the idea of adding more shares if we did get some downside moves, but what you'll hear in this is I am a little bit on the selective side when it comes to stocks to buy right now or price levels to buy them at, simply because I do think stocks are a little pricey across the board and would love to either see an improving macro situation or a significant dip in some prices to get me interested. Accenture is also a stock here that is on the watch list. However, momentum gets a -2 score for this one, and I just don't love buying a stock that is in free fall. Accenture is an interesting story, but I am continuing to watch this one for a reversal pattern of some sort. If we were to see price start to break to the upside, right? If you were to see some momentum form, maybe base out here, there could be an opportunity for me to potentially buy that stock. But where we currently sit, I just don't love the idea of buying this name, at least at this time, until you get some signs that stock price wants to reverse. One that looks interesting to me is UNH. This is United Healthcare. And if we take a look at UNH, I've been watching this one for a pullback. If we get some downside in the stock this week, this would be, let me actually map this out. This would be a drop of around 6 to 7%, which if you've been watching United Healthcare for any amount of time, you know that is a very possible dip to happen very quick. The stock's been under a lot of pressure here recently. I think it could be a nice, worth the risk, I should say, around 38.2% retracement, around a 312 level, 315 level on the stock price if it were to dip. The reason for this is similar to Accenture. It's gotten killed here recently. However, the stock seems to have bottomed out, maybe putting in a bottom around this 240 price. We've bounced back. We consolidated around this multi-month high, broke above it, and as we pull back, if we do get into that area, I think that there could be some momentum forming on this stock for a bigger reversal. So I do like United Healthcare Group quite a bit, and I'm looking to buy the dip on this and get back in this name. So that's one on my watch list here. Let's see what else. Most of these, I'm going to try and stick to the higher end of the scoring here, because what that suggests here is it means that our technicals, our sentiment, and financials are mostly aligned to the bullish side. A higher score means a more bullish overview. And I am still overall bullish on the stock market. If I was to try and hedge my existing positions, I could flip this around and take a look at some of the more bearish scores, in which case we have my beloved Tesla. Momentum has actually started to pick up to the upside here, but don't even look at the financials. It is rough for Tesla because, of course, this is a very speculative name, and one of the shortcomings of the top stocks algorithm is it does focus a little bit more on value-centric stuff, right? So if a stock is trading cheaper than its usual price on average, like price to free cash flow or debt to equity, it gets a higher score. Well, Tesla's had falling earnings and falling revenues, which is just not boding well for the financials part of our scoring here. So Tesla is getting a pretty negative score. Now, I own shares of Tesla, but I am actively looking to sort of take profits on that trade. It was more of a trade from the April sell-off that we saw this past year. So I can't really justify currently being long Tesla for at least for a dramatic amount of size in my portfolio, right? We could also take a look at like Deere. Let's actually just look at that. So if I pull up DE, this is John Deere, or Deere and Company, I should say. The stock has sort of lost its momentum here in recent times. In the last, it's not really been a remarkable performer here. Some of that, I believe, is some of the prices of agricultural stuff. And so what we can see here is price has trended lower here. And I'm actually curious a little bit further. We could take a closer look at what is up with the stock analyzer tool. If we just switch over to DE, we can pull up John Deere, take a closer look at what we've got on that side. And what we can see here is that when we take a look at the stock's PE ratios, price to sales, revenue growth, etc., it's not a pretty picture. I mean, we have versus its own history, the stock just looks rough, right? Most of our metrics are looking not great. The way to read this, guys, would be, okay, the forward PE of Deere is 13.2. That's the 3-year average. It's currently trading at 22.2. So it's priced expensive relative to its historical average. And so that's a stock where I'd probably pass on that one. Or if I was bearish in the market, that would be a potential short sell opportunity. From a trading perspective, if I were looking for, a stock to short, that might be a way to approach that. But let's get back on topic here. I am more interested on the buy side if we were to get some pullbacks. So we can go back here and flip this around. By the way, if you want access to the stock box, I will leave a link in the description down below to where you can purchase a copy. And if you use the promo code YTVIP, you can get your copy for a discounted rate. If this is something that you're interested in, I use it every single day with my stock trading and investing to find better opportunities and scan more data. In today's world, I think you do want to add financials and sentiment technicals. I know a lot of our traders that are using the tool have kind of painted a bigger, more full picture of the stocks that they are trading, the options that they're trading, ETFs. I mean, this thing does quite a bit of stuff. But that is kind of the purpose of the tool, is to bring more data into the fold for you to quickly analyze stuff and keep an eye on it. In the meantime, another thing we just recently added was the dividend scanner. So the dividend scanner, you can scan by yield if you're interested in that, right? So you can see which companies that we track here have high yields. We can also compare it to the 5-year historical average of that dividend, the payout ratio related. So if you're a dividend kind of person, this tool might be a useful one to you. The macro screener is also a very popular tool. And we also just recently have updated the top sectors screener, which scans a lot of our macro data and tells us which sectors could potentially be strong in the environment that we're in, right? So recently, I mentioned earlier, GDP data has been pretty strong. Retail sales came in good. So that bodes well for perhaps like consumer discretionary, which has been beaten down here. And so that's something to pay note to. So, and recently we also did, last week, we actually saw yields or interest rates rise in the 10-year yield, right? So that actually sort of put a negative read as yields started to go back up here towards the end of the past week. So we use a multitude of different economic data to try and gauge which sectors may be better than others. And let's just say, for example, that you do like consumer discretionary. One thing that you can do here is you can say, okay, I'm looking at my top sectors. Let's say I like consumer discretionary and I like that call. I can then go into our top stocks tool and I can actually scan specifically for consumer cyclical stocks. And now we have stuff that looks, sector that looks strong and stocks within that sector that look strong, right? So Amazon, Dollar Tree, Roblox, these are getting your highest scores. Now, I'm not going to lie, there's not a very many of these individual stocks that look really strong on our scoring other than Amazon. Dollar Tree with just a score of 4 is a little bit lower, but a plus 10 is a really strong reading. So Amazon on dips would be an attractive one based on what we just got done discussing. So if you're interested, pick up a copy. The link is down below in the description. You can explore the stock box on our website, a1trading.com, if you'd like some more information. Thank you very much for watching and have a great trading week ahead.